In this video, I'm going to show you how to detect and catch these spikes here on Boom and Crash without any indicators at all. Hi, my name is Courage and welcome to Trading with Tan. On this channel, we are dedicated to make you a better trader. So if that interests you, we create videos each and every day. So make sure to subscribe to the channel so that you won't miss any of the videos. And also don't forget to check out our Forex Mastery 1.0 course, the course that will teach you everything about Forex trading and how to become profitable. I will leave the link in the description below for you to learn more. So back to the video, I said I'm going to show you how to catch these spikes here on Boom and Crash without any indicators at all. But first of all, let's talk about Boom and Crash and some of the things that people believe with Boom and Crash. So Boom and Crash, what is it? It is a market which makes these small tick candles here and these huge spike candles here. So we have two types of these markets. We have the boom market, which makes these spikes going up and then these tick candles going down. And also we also have the crash market, which makes this huge which makes these small tick candles and then the spikes will going down. So that's the way the name is generated, boom and crash. So when it crashes going to the downside. When it booms going to the upside. So let me show you how to catch spikes on this market. One of the biggest problems that you have as a trader here is you are going to be placing your trades thinking that if you can catch these spikes here, you can catch a lot of them, right? As you can see here, we have a lot of these small tick candles here that you can get in the market. So if you enter here, you can make a lot of money with these small tick candles. But the problem is there are a lot of these small tick candles, but each and every one of these is worth a very few amount of money, right? So if you are trading a standard lot, this is gonna be 50 cents, right? So the difference is if you are trading forex with a standard lot, it's $10 per pip, right? But on this one, it's 50 cents per each standard lot, right? So what the catch here is, most people, they will come to this market and then they will try to scalp few candles here. But if you want to scalp few candles here, if one standard lot is giving you 50 cents, right, you need like 5 standard lots for you to get like to get reasonable profits right here, right? And there's no problem with that. But the problem is if you are risking 5 lots, right? If you are risking 5 lots on this market here, and then this one huge spike like this one comes and hits up your money here, you are going to be risking more than you want to. Why? Because these huge spikes here, they don't respect your stop loss. And let me correct you there. I know you knew it doesn't respect the stop loss, but it does. But the reason why it doesn't respect the stop loss is simple. These lines here are just too close. These ticks, these are not candles. They are called ticks. They are not candles. So these being ticks, this is a very small movement, right? So let me go to the higher time frame, like the 1 hour time frame, and we are going to see that these lines are just too close together. So if you look at this, these were the lines, the entry and the stop loss right there. But if you go to the higher time frame, these lines are just too close together. So it doesn't make sense for you to place a trade right here and then place your stop loss at that same point, right? It doesn't work. So that's why people say this market doesn't respect stop losses. It does respect stop losses, but when you are trading on a smaller time frame, you are going to be thinking that you have a bigger stop loss. But no, this is not a bigger stop loss. It is very small on a bigger time frame, and that is why your stop loss is not being respected. So now let me show you exactly step by step how to catch spikes on this market. So I'm going to go to the boom market first so that I can show you how to catch the spikes in the boom market. So this is the boom 1000, right? So with this boom 1000, if you want to catch spikes here, it simply means you are going to be placing buy orders, right? We are always going to be looking to place buy orders. But how do you do this? You are going to go to the 5-minute time frame. Do not do this on the 1 minute time frame. Do this on the 5 minute time frame. And when you go to the 5 minute time frame, what I want you to do is you are going to be marking out levels of support. Do not worry about resistance. Just mark out levels of support. And levels of support, I'm talking about levels like this, right? These are the levels of support right there, because you can see that the market was moving to the downside. It goes up again, comes back, goes up, comes back, goes up, comes back, goes up. So this level was working as a level of support. So how do you get this level of support? You want to mark out any level that the market reversed in and moved up, right? So you just come to this point here, and then you mark out this level here. The way that you mark out this level here is you draw your level, which is equivalent to two black red candles here. This market was going down, so you're going to be covering this first candle and this second candle, and then I want you to mark this zone here. You mark it out here. So when the market now comes back into that zone, when it starts coming back into that zone here, right, when the first red candle enters this zone, you start buying here. So when you buy, there is a potential of you seeing the market going against you for another 1, 2, or 3 candles before a huge spike comes, right? So if you do this, if you can see that here, you were able again to place your trades when this candle again started coming back. Okay, let me do this. When this candle started coming back into this zone here, you were starting to place your buy orders here. And then once you buy on this red candle, the reason why I say you mark out the two previous level here is I want you to start buying when the market is still going down, so that, because if you wait to catch this spike here, you might find it too late to enter into this market. It happens so fast because it's a spike candle. So when the market starts entering into this zone here, you want to only start buying. But what you want here is, first, make sure you find a level where the market reversed on. On this case here, we see the market moves down and makes a strong move here. So what do? You mark out this level, these two candles here, you mark them out, and then do this. Just do this and wait for the market. So when the market moves up here, you mark out this level and wait for the market to come back into that zone. When the market starts moving into the zone, what you want to do here is you start buying on this red candle here. When you start buying here, the market is going to go against you for like 5 to 10 minutes, and then it moves up, right? So once you do this, you put your stop loss right there. So let's say you were buying at this point right here. I'm gonna color this blue for a buy order. So I'm gonna color this blue. We were here, and then the stop loss, what you want to do is you want to put it below the lowest level of your zone, right? And the reason why the stop loss is going to be respected here is simply because these small candles here, they move these small tick candles here, they move in a slow manner, so they will just go ahead and hit your stop loss if you are wrong. And then if you put here, you put your take profits 1-to-1 or 1.5-to-1 risk to reward ratio. So you find out that if the market reverses, makes a spike on the 5 minute time frame like this, if the market reverses in from a zone, makes a huge spike, if you mark out that zone, there's chances that when the market comes back into that zone, it will spike again. So for the take profit, what you can do, since this is you can use this as a scalping strategy. Once you get a spike, after the spike you exit the market. So in this case, if you were entering, let's say at this point here, the market moves against you a little bit and then goes up, you would exit at this point here. You can just take one spike from this. You can also wait for 2 or 3 spikes, which can happen sometimes it will not happen. So again here you can see the market moves back into this zone, goes up, you mark out this zone, your market comes back again here, you buy. You were also maybe going to buy at this point, and then you would hit a losing trade here because your stop loss would be around at this point here. So I'm showing you this to show you that you are not going to win 100% with this strategy, but it's a good strategy for you to start practicing to catch spikes and also practicing to use support and resistance. If you want to learn how to use support and resistance in a more in-depth chapters and more in-depth courses, I have the course called the Forex Mastery 1.0. I will leave the link in the description, so make sure to check that course out right now.